I think a lot of people are lost at any stage of stock investment. Even though some are very determined to achieve their goals, they're more or less lost in the process.
Hi, welcome to my channel.
In the wake of the explosive valuation growth of NVIDIA and other AI leaders, many people have said to themselves, I've always wanted to invest in AI artificial intelligence stocks, even though it's sometimes been more volatile. His or her partners have a similar feeling. Get on board before you miss out. What does their vision look like? He and she devised that my portfolio should consist of at least the Magnificent Seven: Apple, Microsoft, Google's parent company Alphabet, Amazon, NVIDIA, Tesla, and Meta, a tech, chic, gold, capitalized portfolio, especially if they do a stock split. It's a great idea. Okay, today I'm going to talk to you about stock splits, and I'm going to analyze the data, and the point is that you know where to invest next. Perhaps the best example of a stock split stock that investors are flocking to is NVIDIA Nasdaq, NVDA, the company driving the artificial intelligence revolution. Since the beginning of 2023, NVIDIA's market capitalization has increased by nearly $3 trillion. Read more. NVIDIA has gone through 6 splits to date, and its stock price has risen an astonishing total of over 500%. Following the June 7, 2020 split, the stock has risen over 27% since the split was announced. A stock split is a mechanism that allows a publicly traded company to ostensibly change its stock price and the number of shares outstanding. In a sense, a stock split is cosmetic in that it does not change a company's market capitalization and does not affect its operating results. There are 2 types of stock splits: forward and reverse. With forward stock splits, publicly traded companies are making their stock nominally more affordable to the average investor who may not be able to buy fractional shares through a broker. Meanwhile, reverse stock splits are designed to increase a company's share price, usually with the aim of ensuring that it meets the minimum continuing listing standards of the major stock exchanges. While both categories can produce long-term winners, most investors tend to invest in companies that engage in forward stock splits. High-flying stocks that need to make their share prices nominally more affordable to retail investors are usually companies that innovate and execute better than their peers. In other words, I expect the value of this business to continue to rise. In 2024, merely a dozen well-known companies that have stood the test of time have announced stock splits in the works. For more than 4 decades, companies that engage in forward stock splits have outperformed the broader market. According to a study by Bank of America Global Research, companies announcing forward splits have generated an average return of 25.4% in the 12 months following the initial announcement of the split since 1980. By comparison, the benchmark Standard & Poor's 500 index had an average return of 11.9% over the same timeline. Large stock splits have been a winning strategy. Investors eagerly await Broadcom stock split Nasdaq FGO. The company's board of directors approved the 10-for-01 forward split on June 12. And this stock price adjustment is scheduled for July 12 after the market closes. Similar to NVIDIA, Broadcom has taken the proverbial bull by the horns and capitalized on its first-mover advantage in the AI networking space to make substantial gains. It launched the Jericho 3 AI chip last year, which can connect up to 32,000 GPUs in high computing data centers. Broadcom's AI solutions are designed to reduce tail latency and help maximize the computational potential of AI GPUs. This is my favorite investment theme: dividend income. Broadcom's dividend policy is to pay approximately 50% of its free cash flow (FCF) as a dividend to shareholders. In the just-released Broadcom earnings report, the company's free cash flow is up 18%. For other dividend income investors, please note that Broadcom usually declares its annual dividend increase on or around December 10th. In 2023, Broadcom's dividend increased by 14%. Back in December 2019, Broadcom increased its dividend payment by 22.64%. This year, I think the dividend will be 14%, maybe even higher. Reason from value to growth. Bank of America analysts raised their price target on Broadcom Nasdaq FGO stock to $150 from $0, citing its shift from a value stock driven by growing AI and VMware ARE contributions. VMware contributions to a value stock to a growth stock. Broadcom Nasdaq FGO expects Q2 revenue to surge 43% to $12.5 billion. This is a wonderful day. Wall Street's newest stock split stock is up 27,000% since its initial public offering. While most investors may be eyeing Broadcom's upcoming stock split at the end of the week like hawks, there's another high flyer with an even more impressive long-term track record about to split its stock. Since its initial public offering IPO in July 1983, shares of home furnishings retailer Williams-Sonoma NYSE WSM are up about 27,000%, or more than 41,100% if you add in the dividend payout. Yes, you heard that right. Since its initial public offering, Pottery Barn, West Elm, Rejuvenation, Mark & Graham, and its namesake Williams-Sonoma have completed 7 forward stock splits. After a 22-year hiatus since the last stock split, Williams-Sonoma's board of directors approved a 2-for-1 split via a stock dividend on June 13th. The split will be effective at the close of business. Drum roll. Monday, July 8th. This means that when Williams-Sonoma opens for trading tomorrow morning, it will be trading close to $140 a share. Williams-Sonoma, Inc. is an American consumer retail company that sells kitchenware and home core products. The company has 625 brick-and-mortar stores worldwide and distributes its products in more than 60 countries. Williams-Sonoma, Inc. operates a number of retail stores including Williams-Sonoma, Pottery Barn Kids, PBTEEN, West Elm, Rejuvenation, and Mark & Graham. Mark & Graham, Williams-Sonoma. This brand sells high-quality products for the home. Pottery Barn, founded in 1948 and acquired by Williams-Sonoma, Inc. In 1986, this brand provides furniture, accessories, and decorating advice. West Elm, the brand offers contemporary furniture and home decor. Rejuvenation, the brand offers classic American lighting and home decor. Mark & Graham, launched in 2012, the brand offers colorful and durable gifts and accessories in more than 50 unique monograms and type finishes. These brands cover all aspects of home decor, including furniture, lighting, bedding, kitchenware, tableware, and personalized gifts, similar to what Walmart and Chipotle responded to when they announced their 2024 stock splits. Williams-Sonoma is working to make its stock more accessible to investors and employees. For companies with employee stock purchase plans (ESPPs), it's often much easier to encourage employees to invest when the stock price is low. This seems to be the impetus for the company's 8th spin-off since going public. One of the key reasons for Williams-Sonoma's improved margins is the company's decided focus on e-commerce. While it continues to have a brick-and-mortar presence, 2/3 of the company's sales can be traced to its digital channels. Since 2019, the company's CAGR from e-commerce has been 11.1%, which has helped keep overhead costs in check. Another reason for Williams-Sonoma's continued success is its focus on middle and upper-income consumers. People with higher incomes are less likely to change their spending habits during periods of mild economic turmoil or above-average inflation. To add to that, Williams-Sonoma may be in the best position to benefit from the current economic climate. With mortgage rates soaring over the past 2 years, existing homeowners have little incentive to move. This plays right into the company's hands, as homeowners choose to remodel or refresh their homes to give them a new look. Over the past 2 years, mortgage rates have risen in the U.S. In June 2024, bank lending rates in the U.S. reached 8.5%, the highest level since 1,955.58003, 16,003 to 17,000. The U.S. 30-year mortgage fixed rate has soared over the past 2 years as the Federal Reserve embarked on the most aggressive tightening cycle since the days of former Chairman Paul Volcker in the 1980s. That rate, which was just 3% just 2 years ago, has now touched 8%. In 2022, the U.S. economy will grow at 2.2%. In 2023, the U.S. economy will grow at 2.5%. As the economy grows, the supply of loans falls short of demand, and interest rates grow with it. The largest stock split in the history of the New York Stock Exchange. Chipotle Mexican Grill NYSE, CMG, a fast food chain, conducted a stock split on June 25, 2024, into 50 shares each. This was Chipotle Mexican Grill's first stock split, and one of the largest stock splits in the history of the New York Stock Exchange. Chipotle Mexican Grill's stock price rises after the stock split. On the day of the split, the stock was up 0.44% to $3,207.92 in pre-market trading. The day after the split, shares were up to 0.80%. Since the stock split plan was announced on March 19th, its stock price has risen 23%. Chipotle's formula for success has always been its transparent food preparation, which includes the use of responsibly raised meats and locally sourced vegetables when possible, and a limited menu. Keeping the menu relatively small helps employees prepare meals quickly and ensures that lines at their stores stay moving. Read more. Whether Williams-Sonoma stock is still worth buying is debatable. While it has consistently beaten Wall Street's widespread profit expectations, sales growth has stalled in recent years. While higher profit margins and a hearty stock buyback program have provided a nice boost to the bottom line, its forward P/E ratio of 17% is about 34% higher than its average over the past 5 years. Unless Williams-Sonoma resumes meaningful sales growth soon, even a stock split to squeeze more money out of the proverbial orange could be a challenge. Your investment strategy. Whether it's before or after the split, you should keep a close eye on the company's performance and market dynamics in order to make an informed investment decision. Pre-split purchase. If you believe in the company's fundamentals and prospects and intend to hold on to it for the long term, and the stock price is relatively low before the split, it may be a good idea for you to purchase the stock before the split. This way, you can enjoy the post-split price increase, and the volatility of the stock price may be offset by the post-split price increase. By after split, if you are a short-term trader, sometimes there is a short-term price increase after a stock split. If you think this price increase is temporary, you can benefit from it by buying after the split. However, please note that after a stock split, the quote, chart, and watchdog software will be automatically adjusted. So when analyzing using historical information, pay attention to whether or not there is any adjustment after the split. Well, today's video is here. Thank you for watching. Next time we meet again, do not forget to favorite and like you.